a representative, but you're here by yourself. It's not something that we take for granted, that every Friday we are here to learn from each other. And we're also glad that we have resourceful people who are always coming through to share with us knowledge. And today, we are glad to have none other than Mr. Balije. All right. So we are glad to have Mr. Balije, who has joined us for this session from the Capital Markets Authority. I'm just trying to get his profile, but one of the things, even as I try to get his profile, I think I've known Balije for quite a while, right from university. We were not in the same class, but we had shared interests. And I think I've seen him grow within his career. I've seen his energy in the area of investment from the time he participated into different challenges during the times of university, to his work in Kenya and all that he's been teaching about financial markets and whatever. And now that he's working with the key regulatory body in Uganda, which is the Capital Market Authority, I think for me, it's something that I'm proud of having a connection like him. So Mr. Norbert Kiza Balije is a public education officer at the Capital Markets Authority, dedicated to advancing financial literacy, responsible investing, and regulatory transparency in the Uganda's capital markets. He has a Bachelor's of Science in Finance from Makerere University and a Master of Science in Financial Management from Heriot-Watt University, which he obtained in 2022, with expertise in financial management, financial consulting, coaching. Norbert is passionate about educating investors who we have today, entrepreneurship, economic empowerment, and shaping policy. He has actively contributed to the capital markets development and the financial inclusion. Nobody's previous work experience includes working with Equity Group, Uganda Retirement Benefits Regulatory Authority, and African Alliance. Ladies and gentlemen, join me in welcoming Mr. Norbert Balije, our guest speaker today, who will be taking us through the topic of unlocking investment opportunities, practical strategies for professionals to build wealth. Norbert, you're most welcome, and the floor is yours.
Thank you so much. I'm very happy to be here. I was actually also caught up in jam. I promise you I had to get on a border. I parked my car somewhere along the way and got on a border because I was not going to let I was not going to let traffic jam stop me from attending this session. So there's something they normally say. They said desperate times call for desperate measures. So in this case, I had to. Then when I got on with the border that I got, also got stuck in jam. So I had to get off that border and walk
Interesting.
for a certain distance. Then after walking a bit of distance where I saw maybe, like there's nothing stopping the movement, I said, let me get back onto get another border. And here I am. But I left the car at a safe place. So I'm sure after the session, I'll go and pick it up.
That is good.
So, Sam, I'm really happy to be here.
Much.
Thank you so much for having me. It's really nice that the people are typing into that group so I can be able to get an idea what we are going to cover. So again, thank you so much for introducing me, Coach Sam. I'm really happy to be here. The coach reached out to me on LinkedIn to see whether we could have a session, and I was very, very excited about the opportunity. I really enjoy these sessions. I have several of them. Just last week, we were speaking to financial literacy coaches in Masaka, and the week before, we were speaking to coaches in Mbara, and then before that. So actually, we were supposed to have this session way earlier, but because of that, and again, like some say that we usually have the sessions on Friday. So I'm happy that 26th today we're having the session. Yeah, so again, I don't want to introduce myself again since Sam has done a good job with that. But the main focus of this session is majorly going to be about investments. We are also going to speak about financial discipline. Most, again, of the sessions that I normally have as a public education officer at Capital Markets Authority is we mainly focus on empowering people in financial management. Most of my work previously, before I joined Capital Markets Authority, I was working with Equity Group, and what I was doing more or less the same thing. So my work again at CMA is around the same area, and I'm pushing in the same things, speaking to people about financial discipline, ways on how to grow money, the safe places on how to grow money, so that you can have money and have that money working for you, but in the safest way possible. Because again, this is how money grows. And of course, the other thing is also talking to the public about the several financial scams we have out there and equipping people with the necessary information that they need to make prudent investment decisions. So essentially, that's really going to be in a nutshell what we're going to focus on today. Just give me a moment. I think I need to just clean my AirPods a bit. They keep popping out of the ear. So let me just do that just briefly, then I can resume.
That's okay. All right. So thank you so much for that great introduction. And thank you so much, all those that have just joined us. Let's keep the introductions coming through. I see Philip joining us from Moroto. Quite a lot with expectations, aspects to do with financial security, how to build my career on financial and policy formation, how to improve IT skills, financial risk management, financial fraud handling, quite a lot. Salon Georgie from Kabusu. Good to have you, Timothy. Yeah. So over to you, Norbert.
Thank you so much. Okay, that feels much better. Yeah, that feels much better. At least now they're stuck in the ear. Great. So thank you so much, the participants. I'm seeing everything that you want to, get from this conversation, and definitely these are not new to me, so we shall definitely be able to handle most of these things. All right, so let's begin. Again, for those who are just joining us, my name is Norbert Karije Kiza. I work at the Capital Markets Authority as a public education officer, and most of my work essentially is to speak to Ugandans of different diversity, the diverse population, about money, to speak about the Capital Markets Authority and what it does, but also speak about investments, which of course is going to be our focus today, and the different investments where you can keep your money so that your money can grow. So we're going to start it off, first of all, by understanding what are capital markets. In the simplest way, I'm going to keep the presentation really simple so that it can, we can be able to, everyone can be able to pick something, because again, I'm sure there are a variety of audiences. We must be having professionals here, but we might also be having maybe students, people that may have little or no financial knowledge about this product. So we'll keep it simple, but we shall see how the discussion goes as we move along. So first thing, we shall first understand what are capital markets, okay? For those who haven't heard about capital markets before, what are they? Then we shall speak about the role of capital markets in economic development. Then we shall also speak about what capital markets is. Then we shall speak about the products. And for those products, we're going to speak about quality investment schemes, which are a very unique product, and I'm excited to speak about that. Then we shall also speak about shares or equities, as we call them, in these different companies. And then we shall speak about government securities. So for government securities, that's essentially bonds and treasury bills. Okay, so what's a capital market? So the easiest and simplest way to understand the capital markets is to look at our markets that we have here, these different markets, the food markets, the fresh food markets. So if you, I'm sure all of us, we buy food. Okay? We buy food for home. We buy food because we live off food. Okay, that's what sustains our bodies. That's what gives us the sugar, the energy for us to do our day-to-day activities. So when you go to the fresh food markets like Kalere, like Nakasero, which other ones? We have the one here in Akawa. So when you go there, you go as a buyer, okay, and you're going to the market. You're going there to purchase, okay, to buy products, food products. So when you get there, you're going to find these Batembe, okay. You'll find them in their different stores, and essentially what they're doing is that they're just, selling products to you. So you go there and tell them maybe Nyagala Nyanya, or I want to buy tomatoes, okay? Or I want to buy maybe onions, whatever it is that you may want to buy. So when you get there, you say, I have maybe 10,000 shillings, 20,000 shillings, then they'll say, okay, for this, you get maybe this much, okay? Then that transaction that we are calling where you give them money and then they give you a product, that is essentially how the capital markets work. It's just a market, okay, where a buyer and a seller come together, exchange products. But now, in the case of capital markets, it's not food products. Here we're talking about financial products, okay? Or in the other term they call it is financial securities. You have someone who wants their money to work for them, and then you have someone who knows what to do with that money, okay? That's what happens in capital markets. And the people that want to use that money or that know how to use that money or what to do with that money, we have the government, then we have companies, the corporate companies, any company that is body corporate, all of those qualify because they are getting money from now you. Okay. Now, I'm sure most of us have an income. We have an income. It could be maybe business income. It could be maybe a salary. Those who are getting paid month to month. You have a paycheck that comes in every month. Okay. And then, you get this money and you're putting it somewhere. You're saving your money, right? You're taking off money every month uh, to invest, okay, or to keep that money aside for emergency purposes, whatever the case may be. So the way the capital markets work, they work in such a way that they are created so that you can have money that is packed or saved somewhere, going to places where it can get value, and then that money is then returned back to those who are saving. That's essentially how the capital markets work. And the money goes into various places. You have money that goes into shares, okay? Those of you that when you buy a share, when that money is put into a share of a company like MTN, like Airtel, like Stanbic, that Stanbic works on that money. And then you will see that the money which you exchange for maybe a share, maybe it will increase by this much, okay? Because Stanbic is putting that money to good use, increasing its business, making money from that from its business, and then that money comes back to you, and you shall see how your money is able to grow from these different products. Yeah, so that's how capital markets work. Okay, and in capital markets, the products we're talking about, we have unit trust schemes. Okay, we'll talk about unit trusts yeah, in a bit more detail. Then you also have the shares, which I've just speaking about, and then you have now the bonds. Okay, and bonds are diverse. We go even beyond just the government bonds. Okay, for knowledge purposes, you have municipal bonds. If KCCA wanted to maybe perhaps there used to be these trucks. I don't know if you guys remember them, but there used to be these trucks that used to clean the streets. I think I remember seeing them around uh, the KCCA headquarters. They would clean the streets, I think, around Friday evenings. When we had, I think, Jennifer Musisi, that used to happen. So let's say, for instance, now KCCA no longer has any trucks and they want to maybe purchase trucks for that. Okay. And maybe the money which they're getting from government is not enough. They don't have to wait for government to give them money. Okay. What KCCA can do essentially is come up with what they call a municipal bond. Okay, so a municipal bond, they will come to the Capital Markets Authority, then we shall give them approval, and they will structure out that bond to see possibly how will KCCA be able to return people's money over time. Okay, it could be maybe they will work with maybe an investor to invest money into that municipal bond, maybe for an agreed period of time. Or it could be maybe KCCA is going to do something with that truck, maybe clean private roads for them to gain, for them to get paid by companies for cleaning those roads. So there's a lot of ways in which these products are structured, and of course for capital markets, there are immense ways in which money can be raised. Yeah. So now we move over to the role of capital markets in economic development. So it goes beyond even maybe KCCA possibly wanting to buy trucks or water cannon trucks, as you may call them. It could be maybe government wants to set up a road, so sort of like the express road. And I know a lot of us have used this road before. It has helped us in times where we need to get to places fast. Okay, when you want to get somewhere fast, this is the answer for the express road. So government set up a road, and for setting up that road, of course, this road was financed by debt. It was not financed by a bond, or they didn't come to capital markets to raise money. So the government of Uganda has two ways to raise money. They don't have to wait for taxes. They could actually come to capital markets, and then we get investors for them to invest in infrastructure, and then they structure out that whatever in such a way that maybe money will come through this. So if it's maybe a bridge, when you cross the bridge over a water body, you pay money. A Ugandan pays money, that money goes to finance, rather it goes to pay this investor. So that is how the capital markets work. Now, when you see this express way, it was financed by the Chinese government. Okay? The Chinese government gave the government of Uganda money, and they set up this thing. Okay, so now I know every single time we use this express, we pay money. Okay, I think it's about 5,000 shillings per day. If you cross that gate, you pay 5,000 shillings. So that money adds up, and that money is now being used to finance. Okay, rather to pay. They're doing debt financing. They have to pay for. They have to pay. It's a loan. Okay? In other words, it's a loan. So they're paying that money back. Okay, to the Chinese government. But to reach a point, government of Uganda reach a point where now they are finished paying their what? Their debt. Okay, sometime in the future. Okay, because these infrastructures stay there for a long time. They're going to be there for years, even beyond when we are alive. Will still be there, still being used by Ugandans. So they'll reach a point where they will stop paying, and now it will be income. Government will be making profit from it, and that money now will be used to set up maybe other things, to maybe finance our budget, whatever the case may be. Okay, yeah. So now, if government of Uganda wants to set up an express, maybe where? Maybe they want to set up an express in Hoima, okay, or they want to set up an express somewhere, okay. What they will do, they'll come to the capital markets, and then we shall link them to investors who, the same way people, Ugandans put money in bonds. You can put money in infrastructure. You don't have to put money in a bond, in government bonds. You can even put money in infrastructure bond. And instead of waiting 5 years, 10 years, maybe for an interest of so much, okay, you put your money in infrastructure bond. You're getting maybe money every 6 months, every 8 months, and that money, where you're getting your money from, you're getting it from the toll. Okay, so different infrastructure has different ways you get money. When I went to the US, I think back in 2016, there was a huge, and I've seen a lot of that infrastructure in most of these developed countries. I think I don't know if most of you have seen what they call, I don't know what they call it. It's I'm forgetting the exact term they use it, but it's I think a globe somewhere. I think in one of these states. It's a globe, and companies have advertised with it. Okay. Some of the biggest artists we have, like you know them, these artists, the famous artists. We have like why am I forgetting them? They have concerts, okay? The Drakes, these big artists, they have concerts inside that place. Now, people go inside that place, they pay so much money, and that globe, which was set up there, was set up by an investor. Possibly, maybe it was financed through the capital markets. But the revenues that are going to come through that thing is incredible. You'll have that globe is being used as for concerts, so they're getting ticket sales from there. They're using it maybe for advertising. Okay. Now that's the place where I went to when I went to the US, in a small state there, but that was back in 2016. It was an ice hockey stadium. So they were using it for ice hockey. Then I also saw that whenever they was using it for ice hockey, their basketball, I think turf. Okay, they would move it up, and then now they leave the ice hockey what. So it was incredible. They are using this infrastructure, but for three different things. Okay, so you can see how the kind of places where it's possible for money to go, but for this money the money comes through capital markets because investors, the kind of investors we have that are investing even through the deal flow facility that I'll talk about, all these different places, the investor doesn't get their $5 million, they come and just put it there like that. They go through the capital markets because of the structures that are there. Okay. And that's why for my next point, I want to go to the high standards of accounting, auditing, and corporate governance that's involved. When a company comes and sets up, when a company like MTN or Airtel wants to, get money from the public for them to sell shares, they go through immense scrutiny. It's beyond even just them maybe giving their financials to the capital markets. It comes even close to something what they call disclosure. Whatever happens, recently we saw MTN was removing its mobile money. For that to happen, for them to remove the mobile money so that they comply with Bank of Uganda, it had to be approved by shareholders. So that is immense scrutiny. Every decision, the transparency that is there is absolutely high. So it makes it really easy to have the public trust that's, through this kind of capital markets. And that's how unique the capital markets are. And, the kind of money, if you look at maybe like the shares, we're looking at about 14 trillion. That's how much money is packed there. And look at unit trust, you're looking about 4 trillion. So money is packed there, You cannot have 4 trillion of people's money in a product when it's a scam, And the only way the money is there and Ugandans are getting their interest from these products is because of the amount of structures that are there, So that is how beautiful and unique these capital markets are. So here in brief, we're talking about providing alternative long-term financing. We've spoken about that long-term, okay? Financing, ventures like, if you have a venture like the Express, long-term, those are long-term projects that are going to provide long-term socio-economic benefits to Ugandans who are using the roads for travel, for what. Some people are even moving goods maybe from somewhere, maybe Semoto somewhere, and they're moving it maybe to whatever. This road provides so many immense benefits, financial, socio-economic. There are many benefits that come. Okay, now Capital Markets Authority, what does it do? So capital markets, we are just a regulator. We are a watchdog, and we watch how we oversee the capital markets in Uganda. Capital Markets Authority was set up in 1996, and the reason why it was set up through an act of parliament for the main reason of protecting investors. To regulate, okay, regulate is to control the activities, okay, the processes, everything that affects the capital markets, CMA is involved, so the Capital Markets Authority is involved. And of course, we look at the mandate. What is the mandate of the Capital Markets Authority? First thing we have is promote confidence in the market. How do we do that? We promote confidence by putting out public notices, okay? We promote confidence by ensuring that there is high public trust in products, okay? But also, we promote confidence by market development, okay? To see how can we improve the market and make it even better so that people can be able to invest in these capital markets over time. Then we ensure honesty and transparency in capital markets transactions, and we do this through the market supervision arm, okay? And where our team of market supervision ensures that everything, every process, every activity is reported, okay? Is reported in form of the public can report if something is not being done correctly by a licensed entity. You can report, you can whistleblow, we call that whistleblowing. But also these entities are under immense scrutiny, okay? So we are always checking on their activities They have disclosures they give, like the brokers have to provide net caps to ensure that they're actually able to operate and to run their processes the way they should. So there are many ways capital markets does this. I've just mentioned a few. Then the third one is carrying out investor education, which is what we are doing today. Okay, so investor education is focused on products. It's also focused on financial discipline. You know where you should put your money so that your money is safe. These are some of the things we talk about. Then to protect investors, we do this through public notices, also warning the public against scams. But we also ensure that our entities provide or disclose information that affects the financial, that affects the public's finances. Okay. Then we also reduce systemic risk. Now, systemic risk, how do we do that? The capital markets is part of what we call the Financial Sector Stability Forum. Okay, and in that forum, you have the Capital Markets Authority, you have Bank of Uganda, you have the Uganda Regulatory, Uganda Retirement Benefits Regulatory Authority, and then you also have, I think there was the Microfinance Regulatory Authority, but now I think it's no longer there. You have the Financial Intelligence Authority. Then you also have the Deposit Protection Fund. So what do they do? I've attended one of these simulations before. You have all these authorities together in one place, and then they handle like what they will do is that they will just do any risk. So like maybe their systems have been hit by by hackers. Okay, how do they handle? Okay, they simulate to see the worst case scenario. Okay, how will they? So these simulations happen all the time, and they are, I think right now they are being financed by the World Bank, and the reason for that is just for them to manage in cases where you have like the COVID. Okay, COVID. What happened during COVID? We saw what happened during COVID. Okay, businesses were affected, livelihoods were affected. You know, the processes were affected in terms of how to do things. People have to be in office. So there's a way the entities were ready for that, possibly because they did. They had that forum and they were able to manage through that forum. Yeah. So systemic risk is important because we are talking about livelihoods of thousands of people, millions of people. So that's why that forum is there. Now, for products, the first product we're going to talk about is the collective investment scheme. The collective investment scheme is a very unique product in such a way that it reduces what you have to do as an individual. Okay, your money is managed by a professional. For most of us, we need to decide what to do with our money. Okay, think about this. If, say, for instance, you had money which you are getting every month, and when that money hits your account, you don't decide what to do with it. Imagine that. Imagine if your money hits your account every month, or maybe you're a business person and every single period you're getting money from your business, but you don't decide. When the money reaches the account, someone else decides for you. That's what happens with the unit trust. Okay. Think about how much more value you'll be getting out of your money if you didn't make the decisions you are making. Okay, possibly maybe a professional makes the decisions for you. Some of us are extremely financially disciplined. We are as good as professionals. Okay, but for most of us, we are not. That's why we have things like post savings, NSSF. NSSF, you finish your working period and you realize that somehow you have a very big lump sum of money. Okay. But when you think about that entire period, all the business ventures you tried and your money went, things that you did and your money went, and suddenly you have that money that you even absolutely, for me actually, when I'm putting my money together in my budget, I don't owe when I'm trying to see like where I stand with my incomes and what, I never factor in my NSSF. I never. But that's how serious we should get like with money that's like that we are saving. Yeah, reach a point where I even forget about it. It's there. Like, no, I'm not going to add my NSSF. Let it be there, but it's there. Okay, and it's so unique. I was on Twitter the other day and I saw someone saying that their NSSF had passed 70 million in 2010. I was like, and this is someone who is still working. Okay, and he doesn't need that money, or she doesn't need that money. Or maybe we would, but maybe we would have spent that money on something that's not giving us return. Okay, so that is how the unit trusts work, and the unit trusts are really, really important because you know, when you look at the growth of the unit trust, it's been unique. Right now, there's about 4 trillion that's in these unit trusts. Okay, it's and it's had the growth has just been linear, just been moving like this. Ugandans have been putting money in this thing simply because you don't have to do anything. The money is managed by professionals. So I'm sure you're able to see the logos of the different unit trust managers. Some of the logos are of companies that some of us know, but we know them for dealing in products, different products, which is insurance. That's what I get in such sessions. But you have them having insurance as a separate product and then unit trust as a separate product, right? So we have Britam. Britam provides unit trusts. We have ICA. They also provide unit trusts under the investments. That third icon, the third one you're seeing there. You have Old Mutual Investment Group. You have Sanlam. You have SBG Securities. Cornerstone is the new kid on a block. They just joined, but also providing unit trusts. And then you have Zeno. Zeno provides also unit trusts. There are different funds, and Zeno and I believe Old Mutual. I don't know about, yes, Zeno, Old Mutual, and Sanlam have that option of you investing through. You can invest in a unit trust through mobile money. So if you're a business person and for you get your money through mobile money, it's easy for you to invest. Okay, there. So as opposed to putting your money in, there are so many places where you can put money. You start saving your money in a unit trust, and you see how that money grows over time. Okay, yeah. So what is there to know about unit trusts? Unit trusts work in a way that your money is pulled together into what they call a unit trust fund. Okay, and when your money is sent into a unit trust, there is a certain every unit is worth a certain amount of points. Okay, so when you buy into that unit, you get a certain amount of units. Okay, so you could find maybe for 1 unit is 100. Okay, so when you buy maybe a thousand units, maybe you get 10,000. So that's usually how it works, something like that. So it's you're buying into, you own a unit for your investment, and when you sell, we call it redemption. You sell units and then you get money. Okay, so that's essentially how it works. Now, the money which you put in a unit trust is put in different places. You can have money that goes into a balanced fund. Balanced fund, the money is put in either shares or in government bonds. So it can be in 2 places. Then money market, the money is put in lower yield, in shorter term yielding assets. So it could be maybe something like a treasury bill. It could be maybe something maybe like a corporate paper. Those ones that normally last a short period. Then umbrella trust fund is it's just an umbrella. It's okay. It's just a big fund with sub funds within there. So it could be maybe a sub fund of equity. It works almost the same way like how a balanced fund works. Or it could be maybe a sub fund of treasury bills. So the money is divided into these places. Okay. And then the equity fund is your money going into shares. Now, the equity fund is unique, especially before we get into shares, because for some of us, when you want to invest in shares, when you invest in shares, you don't invest when hearsay. Okay. When investing in shares, you invest after getting the services of an investment advisor. Do not decide which share to buy just from reading the news or you see, if you're investing properly, an investment advisor has to value that company for you and show you that if you are to invest at this point, okay, or even before that, they have to do an evaluation of you as an individual, okay, so that you don't invest in a share after 2 days you're asking for money. So that means that if you invest in a share and after 2 days you're asking for your money, it means that for you, your time period is not favorable for that asset. Maybe you need to invest in something like a unit trust. So for you to decide what kind of investor you are, that's how an investment advisor comes in. Okay, so that you don't over disturb your investment. So now for that, we'll also talk about investment advisors. There are many that you can go to, and then they shall be able to do an assessment for you, and you'll be able to see now where you should invest. Okay. Now, unit trusts and why they are unique, we're going to look at some of the benefits. First thing is professional management, which I was talking about earlier. You don't have to decide. Now, you can decide independently as an individual. For me, I'm going to put my money in government bonds. I'm going to put my money in shares. With unit trust, you don't do that. You just have a certain interest that you're getting, and that interest is with its own unit trust is calculated on a daily. So it's a daily annualized yield that you get. If you keep adding your money in a unit trust every day, your interest is posted on a daily. For some products, your interest is posted at the end of that period. So with unit trust, it's a daily. So if the interest is increasing and you're investing daily, it means that that compounding effect will be seen with the way you're investing. So that's how people are able to grow big sums of money. You don't wake up and you have 50 million, wake up and you have 100 million. No, the money grows over time. You have to save consistently. That's essentially how these things work. Okay. Unless maybe you hit a big deal, you get a big sum of money, and then you just save off that money. But if you want to grow money, it's normally over time. So you plan out that money, plan out your how you're going to grow that money. Now, the minimum that you need to invest in a unit is 100,000 shillings. Okay. You can start with anything. Or rather, not with anything. You can start with 100,000 shillings. You don't need to wait to save 1 million per month or 2 million per month in your savings. You can save 100,000 shillings and your money will be able to grow over time. Okay. So we have liquidity. Liquidity, we're talking about you being able to sell your units. You sell your units or you can get your money out of the unit trust as and when you want. Okay. So the unit trust work very well for people who want to look for setting up an emergency fund. Okay. Emergency funds, you're talking about 7 months of your expenses per month. Okay, that's an emergency fund. You get 7 months of expenses per month. Put that money aside so that in case the idea is that in case you get any emergency, okay, then you can be able to access this money, right? That is how unique the unit trust is. It can be used for that, for that kind of whatever. If you want an emergency fund, you don't put your money in shares. So those are some of the things that you get an investment advisor to guide you. If you put your money in shares, we're not saying that shares are bad, okay? But shares are more or less long term. So if it's emergency and you need to access that money and your money is in shares, if you're facing an unrealized loss on a share position you took maybe in MTN, at this point when you want to access the money, you put money in MTN, MTN is now down by 5%. So you're now in a capital loss. But now if it's in unit trust, your money stays intact as it is with interest. So that is better for emergency. Okay. If you're someone like a long term, now that's where shares come in. Okay. I'm here to get shares, but I'm just trying to show you that how you need to look at these places when you're putting your money. The compounding benefit. When you look at your statement for unit trusts, the interest is posted daily. Okay. There are some products where you're going to get your interest. Your interest is going to be put on your account after a fixed period of time. They'll whatever your interest, they put it there. This is your interest. But for unit trust, your interest is given to you on a daily. So you put 100 million and possibly you're getting maybe I don't know how much interest. Your 100 million, maybe if it's giving maybe say 100,000 shillings per day, you will see it 100,000. You will see that if you put 100 million on your unit trust today, the next day you're going to see 100K. You can withdraw that money, you do something with it. The next day, 100K. You see, eh? So same thing. So you can just do that. You can just work all the way down to how much money it is. That's how unique this product is. Okay. Now, when we move forward, we have the key considerations. So reduced operational oversight, this is more like a textbook consideration. We are looking at it in such a way that you're not the one who's in control of your money, okay? In effect, it's actually a professional who is in control of your money. They are making decisions on your money which you've saved there, and then you're getting a certain return on that money. Now, what are the costs for investing in unit trusts? Unit trusts are not taxed, okay? There was a contention about taxing them, but then later, URA decided they're not going to tax them. So unit trusts right now are not taxed. The only cost that is there is a 2% charge on your capital, okay? and that is an annual management fee. The fee is within a bound, but it doesn't go above 2%. So you're going to get some managers charging 1.5%, 1.8%, but it does not exceed 2% on your capital. It's a very small fee. Think about it. It's a very small fee, but that's for the cost of doing business. Okay. Now, the process of investing, I think this one I've already gone through it. Let's now look for what to look out for before investing. So when investing in a unit trust, you have what they call a fact sheet. A fact sheet is just a document that has different things about that fund. Okay. When you're going to decide to invest in a unit trust, when you get in touch with any of these managers here, you're going to ask them for a fact sheet. So the fact sheet is going to show you essentially how their funds have done since the fund started. You want to get into a fund that has been performing very well from when it started. Okay. So that you can, I'm not saying that there are certain periods where the fund went absolutely down, it went to zero. No, those funds are not there, guys. You're going to find that maybe there was a variation in the interest at certain periods of time, but over time, you're going to see that if maybe you put your money here, you're going to maybe have gotten an extra 2-3 million by putting it here, or maybe an extra 1 million by putting it here. That is what the fact sheet will show you. In addition to that, it will also be able to show you what the investment objective is of that fund. It will show you the fee that is on that fund. It will also show you, what else will it show you? It will show you all the different things that affect the fund. So it's essentially, in a nutshell, it just gives you information about the fund before you invest in it. Okay. Yeah. What's the other thing to know? Yes, I think that's pretty much it with the fact sheet in really simple terms. Now let's go to shares. Now shares is just buying a unit in a company. You can buy shares in companies like MTN. You can buy shares, for those of you that do not know, you can buy shares in companies like Quality Chemicals. And these shares have been doing quite well since the start of the year, since the other year. Generally, what I can say, when you look at the performance of shares since COVID, most of the shares are doing well. Okay, so not only in Uganda, because over to Kenya, you see in the US, most of the shares are doing well. Okay, and even in this year 2025, we have seen some shares doing quite well. You know, you have shares like MTN. MTN has posted about 40% since the start of the year. So look at how MTN did from the other year. I think its gains are crossing 50%. Okay, so the beauty with shares is that the return on shares makes the return on bonds and treasury bills look very small. Okay, but the thing with shares is that you need to be very careful at what point you get in. Okay, and for you to get into shares, you need to get an investment advisor. Um, Best practice for investing in shares. Now, I'll just tell it to you. When you're investing in shares, how companies do it, I'll tell you how company does it, because companies normally, for them, they have very shrewd mechanisms they use to get into shares. First thing they will do is they'll first determine what is the value of this company. That's the first thing. And they'll bring it down to the actual price of the company. They call it the fair value of the company. Okay. So when they determine the fair value of the company, then they will now say the market value of the company, the market price of the company of MTN maybe is 100 shillings. Okay. Based on how we have valued, and they will even do comparable valuation to see maybe if it's maybe a company like ABC. ABC will maybe value MTN and determine that, oh, MTN is actually trading 10% below its fair price, or it's trading 30% below its fair price. And then they will compare and say, ABC, maybe DEF, maybe and GHI. For them, they're all seeing that MTN is actually performing lower than it's supposed to be performing. You get. Then now they will decide and say, based on this, maybe we should put a bit of money in MTN and hold it for 5 years based on this. You see that? Eh? But now you find as a retail investor, for us to just see in the news, then you just jump in. Okay? You're jumping in. First of all, you do not know whether the point you're jumping in is a good point to jump in. Secondly, you've also not determined whether whether the money that you've put, maybe the money that you've put is money that you're supposed to use for tuition, and that money you have to pay tuition maybe by February next year. You check in February next year, maybe you're in a capital loss of 1 million. That does not mean that MTN is bad or Airtel is bad, all these companies are bad. No, you have to have, for shares, we say minimum 5 years. Minimum 5 years. If you look at a stock like Stanbic, in 2017, Stanbic was trading at about 18 shillings. People are not talking about Stanbic. Turn around and look at Stanbic now, it's 35 shillings, 40 shillings. What year are we in? 2025. Someone of 2017 and 2025, you can see there was a very big period there. Over that period, Stanbic stock was moving. Same thing like land, okay? There are certain places where if you buy land now, within the next 10 years, that land is going to be worth much more, okay? That's how shares work, okay? You know, things like that. Yeah, so for shares, you have to have that kind of outlook. But when I say minimum 5 years, I'm not saying that you have to hold 5 years. Nobody said you hold 5 years. You sit there waiting. You're going to see gains of 120% on your share. You're still holding. No, it all comes down to you as an individual. What are your goals with putting money in shares? Have you maybe, if maybe you wanted to make 50% in MTN over the next 2 years, has it has maybe outperformed and it's now doing 80%, take profit. Okay, things like that. That's how you need to be able to decide. But you need an investment advisor. You need people now like Samuel. Okay, because Samuel is a CPA, he's a financial analyst, so he can be able to guide you in some of these things, possibly to value and tell you, you know, how these things work. Now, how do you benefit from shares? So aside from making a capital gain, you buy now, you hold for this period, you make a profit. Okay. You can also get what is called a dividend. Okay. A dividend is just a profit share, right? When you buy a share in a company, you become a part owner in that company. So when it comes to time of dividing profit, they also factor you in, right? But the thing with dividends, and I'll just say it to you plainly and simply as it is, dividends as an investment strategy needs someone with a relatively big amount of capital. Because when you look at the dividends that are paid per share owned, you're looking at about 2 shillings per dividend. So if you have 1,000 shares, you're looking at a dividend that has been paid of maybe say 1 shilling, you're looking at 1,000 shillings. Guys, 1,000 shillings hitting your bank account, that is ATM withdrawal fee for like 3 withdrawals. You're not going to do anything with that money. So you need to change strategy now. For people that have very deep pockets, ideally when they're getting into companies that have a very solid dividend history, especially sectors like banks. Banks tend to pay dividends religiously. Every year when they're reporting profits, they will always pay a dividend. So your strategy might be that you have very deep pockets like 100 million and you're going to get into this company with a strategy that you want to get dividends. You can make a good income over a period of time by holding those companies just so that you can get dividends. Based on a company's dividend history, this company has been paying dividends and it will always pay dividends, so you can be able to get money from that, from just dividends. So it depends on you now. Now, there are other things like collateral. If you're getting maybe a loan, your shares will be able to get you a loan. However, this is up to the discretion of the bank. The bank decides, okay? It decides on that. If they see that maybe the value of your shares are not, they have not been stable, okay? Or perhaps maybe you have very few shares equivalent to the amount of credit you want to access. They will maybe they will decide that no, they cannot, offer you the loan. Now, the other thing that you look out for is transferability. Now, this is very, very important, especially for the parents in the house. Okay, when you're buying a share, depending on the kind of, it's important to have a financial plan. Okay, you need to have a financial plan for yourself, possibly maybe an individual financial plan, and maybe a plan for your family, a plan for the next 5 to 10 years. Okay, for your money. Okay, some parents possibly put money in. You can be a parent. I've seen it with, especially in the US, they have what they call trust funds. Okay, they have what they call trust funds. I don't want to tell my parents this, but I wish my parents had a trust fund for me. I wish. When I look at these American parents, hey, they have trust funds. The child is going to college, has turned 20, they are giving the child, oh, usually they won't give cash, but they will move $100,000 to maybe a company. And that child has $100,000 under that investment company. That's their money. Okay. And maybe the parents can instruct and say, pay the child $1,000 per week based on what they're investing in, or maybe $100 per week. You see that? Eh? That is how these systems are for these things of planning properly for children. Okay. If maybe our parents had set up trust funds 20 years ago, by the time we finish university, we don't have to look for a job. We have income that's coming in, okay? And we can use that income to set up a business. So now it's on the ball is in your hands now. Are you going to set up a trust fund for your children? Possibly it might be a good strategy. When you look at the shares that you have on some of these stock exchanges, like MTN, Airtel, they are operating in areas or in sectors whereby they are going to be there for forever. Okay, Ugandans are going to, we are going to pass away, other people are going to come and they're going to be investing in these companies. They're going to be getting MTN SIM cards, Airtel SIM cards, Telecom. It will be there for the foreseeable future. So if you're a parent and you're saying now for me, I want to plan a trust fund for my child, what can I do? I can do a mix of things. Let me get some shares and I'm putting aside money so that they don't become your dependent. Okay. You're now getting to 60, 65, but your child is still asking you for money. You're still giving your child handouts. The child is 20, 21. You have that dependent. Yet you should also be taking care of yourself. Okay. You also need to take care of yourself, enjoy your retirement, but you also now what? So if you have a trust fund, you just say, hey, look here, I have this for you now. You're getting NSSF, or you're getting maybe your savings you've saved for the next 40 years, 50 years. It's maybe like 500 million. Okay. Then you're getting their trust fund, which is maybe like 50, 60 million. You just say, hey, look here, uh, there's 60 million here. There's an investment advisor here. They're going to guide you where that money is going to go. Usually that's the best practice. Eh? You don't give them the money, because if you give them 60 million, they can burn through it within the next 1 month. The money is not there. Investment advisor gives them that income, and they get streams of income. Okay, as they decide what they want to do. Right. So there are many ways you can go about some of these things, so that you can be able to plan better. Transferability. That's why we come to transferability. Okay. You can, for an unborn child, you can buy shares now, and then when the child reaches maybe an age where they can now open up an SCB account, then they will transfer those shares into the name of your child. Okay. And then, as those shares increase in value, the broker or the stockbroker that we use for buying into shares, those shares now will be exchanged for cash by that child. You get, eh? So you can start planning ahead of time for some of these things, or even for yourself. Okay, yeah. So that's how shares work. It's important, and of course, this information is taken by the stockbrokers. You'll have what they call an next of kin. So if you pass away and you have shares, maybe in MTN, in Airtel, in Stanbic, maybe worth 50 million, your children will be able to benefit because you put an next of kin. And a next of kin, there's some documents that they will sign and everything, and then that money will be given to them. And then that money now can be decided by that person for your children. Okay, so that is how shares work, and that's why they are very, very unique. So we have gone through this. We have issuer risk, where you have companies getting liquidated. But this is not a very, very big risk. You shouldn't really worry about it. For most of the companies, for all of the companies that we have operating, I'm sure we might be having some questions about Umeme. But Umeme currently, what I can tell you is that the Attorney General, okay, valued Umeme, okay, and after valuing Umeme, he came up and said that government of Uganda needs to pay Umeme 118 billion, okay, for Umeme as a whole. And now that money, that 118 billion, the reason why it has not come to shareholders yet, you're supposed to be given that money based on how much money you put, your initial which you put in Umeme. But that money has not come to you yet, because how they agreed with government of Uganda is that, I don't know when UEDCL took over, but there was a date which they had set for UEDCL to take over. So when UDCL took over, even when Umeme was not okay with the AG's amount, the amount which they valued at 118 billion. Still, government of Uganda took over. So they took over, but now they're in court. Okay, now they're in court, and after the decision by court whether to, so the AG, the Attorney General, valued Umeme. He said Umeme is 118 billion. Umeme came up and said no. We actually don't agree with 118 billion. We actually worth 230 billion. So that is now the money which they are now deciding on in arbitration in London. When the arbitration court decides that fine, government of Uganda was right, it's actually 118 billion. So Umeme, stop pursuing more money. Now you can pay back your shareholders. Or if they say, okay, you are right, based on how we have valued your assets, it's actually not 118 billion, but the value is actually 230 billion. So now when they decide on that money, now you as Umeme shareholders, you will now be paid your money based on the shares that you have. So if you're there and you're wondering, now what's happening with Umeme? When am I going to get paid my money? You will get paid your money, okay? But after that process is concluded. Where can you find out about that process? You need to just follow the pages of Uganda Securities Exchange. They have been posting that information. Umeme still posts. There's still a small group of staff working for Umeme, and for them, they are there more or less like administrative staff to handle this process. When it's completed, then the shareholders will be given their money. Yeah, so that is the latest on Umeme. Regarding MTN, I've been seeing a lot of buzz on social media. People are saying, you see, MTN was a road deal. No, the mobile money business of MTN is massive. It is huge, okay? And now Bank of Uganda cannot allow it to operate because of the regulation. There's the National Payments Act, I think, which came up, and they say that mobile money has to be extracted from that company and has to be set up as a standalone company. It's in the law. But now some people are saying, now you see, it was a road deal. It was a scam. There's a lot of whatever, but it's all in the law. You see, you can't fight the law. The law is as that. So, but of course, that will be approved by shareholders. Now, the idea is that Momo by MTN, it's called Momo by MTN, the mobile money, MTN Mobile Money Company Limited. That company is going to list on the exchange. And I know that there's a lot that's happening behind the scenes for that. So when they list, now you as a shareholder, you be able now to, rather not as a shareholder, but you as a Ugandan, you still be able now to buy into that company. Okay. But MTN as it is, fine, a mobile money was its cash cow, but there's still a lot of value with MTN as it is alone, even without the mobile money. There's still a lot of value from data, from calls, and also a lot of other things that MTN is doing, such as renting out its masts, this cable and all that. So there's a lot of value that's there within there. So I think those are, I'm sure those questions are going to come up somewhere later, Sam. So I just wanted to speak about them now. Now, let's go into the final product, which is, just looking at the time, should be done within the next 15 minutes so that we allow the rest of the time for questions. So, government securities. Government securities is just a simple way of government getting money from you. There's nothing complicated about government bonds and T-bills. These are very simple products, okay? You just putting money into these products, and you have these options happening. So the government will come up and say, perhaps maybe we need this much amount of money. And what does the government do with that money? They will invest it in projects, in what, and then it will pay you an interest. So that interest is paid every 6 months. Investing, you can invest from as little as 100,000 shillings. The only thing to know, of course, about the government bonds is that there's a tax, okay? There's a tax that's there. I also forgot to mention, with dividends, just before I move away, dividends, there's a tax on dividends, about 15%, okay? And on shares, there's also a tax. There's the same tax for companies applies to shares, okay? And that's a tax of 30%, okay? So just take note of that, okay? When you're selling out your shares or your capital gains, there'll be a capital gains tax of 30%. And again, guys, this is tied to It's not on your capital, it's on your gains. Okay. Take note of that. Some of us may say, no, it's on the capital. These guys are chopping my capital. No, it's on the gains. So when you make a gain, say maybe you've made, I don't know how much money, the government will take off that money. Okay. But it doesn't affect you from actually making profit. So let's move now to government bonds. Now, government bonds, there is a tax that's there. The tax is if you're getting into a bond that is more than 10 years, the tax is less. It's about 10%. So when you're structuring out your investment in a bond, maybe you're putting money in a bond and you're putting maybe 2 million shillings, you have maybe 4 coupons that you're going to get, okay? And for these 4 coupons, for the coupons that you're getting in maybe the same year, okay? That is, so if it's maybe, for instance, now like 9th January 2025 and January 2025, you will now have gain. The gain here is about that 13.5%. There's a cutoff yield that I'm looking for. The cutoff yield is the final yield that is decided and tied to that bond, okay? And that is done after an auction. So an auction is just people bidding. I don't know if you people have seen these movies where you have there are these movies where you find people selling art. I don't know if you've seen those movies before. Someone saying, going once, going twice, $5 million, going once, going twice. Someone says $6 million. So they bid. Then they decide and say, fine, this is the cutoff yield. So that cutoff yield, no, I'm not seeing it here, but it's the final yield that applies to that bond. Okay. So when that yield is applied, now that is the yield which is tied, and you know that maybe for if you're getting maybe like a 2-year bond, if it's a yield of 15%, you're going to get that yield twice within a year. So it's about 7.5% for the coupon of January, then of course 7.5% for the coupon of July. So when you get that 7.5%, now I'm splitting that yield there. So if it's maybe a yield of like 13%, you split in half. 6.5, 6.5. So for the 6.5 on your capital, you're going to put the tax. There's like a tax there, which they're going to chop on that 2-year. So for the 2-year, it's 20%. So when you remove the tax, that is the net which you're going to get. So when you're investing in government bonds, the money that when these debts which you're seeing, every single time that debt reaches, you're going to get what they call an interest. The interest will be sent to you, but it's upon you to use that money. For some people, they put that money back into the bond. So it doesn't mean that now the interest comes, you eat it. No, you can put the money back into the bond so that you get what they call that compound benefit. Now, the other strategies around bonds, but you have to talk to an investment advisor. Some people do what they call bond layering, whereby you arrange, and I've seen, I don't know if you guys know Alex Makande, I've been seeing him talking about some of these things, where you will layer out your investments. So that every maybe 3 months, 4 months, you're getting an interest. Okay. Depending on how you have arranged the bonds, but into the future. Yeah. So that is how bonds work. I think I've covered most of what's important to know about a bond. Now, another thing that's important, when you're investing in bonds, we have what they call the term, the term of the bond. The term of the bond is just the period, okay, within which you're investing in that bond. The difference between government bonds and unit trusts is that in unit trusts, they are liquid. We're talking liquid in terms of getting your initial capital. For bonds, you only get your money when the money matures. However, in the secondary market, you can also sell your bond, but it really depends on the value at which your bond is trading in the secondary market. If you find maybe, for instance, you've gotten a bond and in the secondary market, maybe the bond is trading at a premium, the interest is higher than the one you got in, you can sell that bond and you get your money out, okay? But if you're holding, if you don't sell it in a secondary market and you want to hold it to maturity, you'll only access that money at the end of the period, okay? If you want to sell your bond in a secondary market, it's very simple. You can do that through any of the stockbrokers I'm going to show you. They can be able to guide you with that, okay? But for most people, they normally hold their bonds to maturity. especially if in the secondary market the bond is trading maybe lower than the lower than the interest which you or the interest which you, the yield which was decided at the time when you got that bond. Okay, but for that, the stockbrokers can be able to guide you with that. So again, you can be able to sell the bonds in the secondary market. I think I've talked about that. What else? Yes. Now, on the point of the collateral, again, guys, you see, with things of borrowing, it's really at the discretion of the bank. The bank is the one that decides. Um, the bank is the one that decides if they're going to if they're going to give you a loan. Again, you have to be extremely shrewd person. You know, your credit history must be very thorough. They have banks have very thorough things. So again, if it's for that, it's the bank to decide. Okay. Now, what is the risk with the bonds? Bonds have the lowest risk. Why is that? Is because the person who is borrowing your money, okay, is the government of Uganda. Now, when you look at the history of governments, when we have regime changes, okay, regime right now, the regime that we are in is the regime of President Yoweri Kaguta Museveni, okay, Sabalwani. That is his other name. I don't see it on his posters though. Now, when Museveni changes, perhaps maybe let's say another president comes in after Museveni, okay, that president cannot affect your bond, okay? You will still be paid your interest. Presidents come and go. It happens all the time in these different countries, but your bond is not affected, okay? So the bonds carry in the hierarchy of risk, the bonds carry the lowest risk, okay? And that's the beauty with these bonds, right? Now, what's the process of setting up an account to invest in government bonds and treasury bills? Very simple. You can use any of our stockbrokers here. They can help you with that. You have Old Mutual, you have Crested Capital, you have there and there. So you go to them, they'll set you up with what they call a CSD account. CSD account is a Central Securities Depository account. When you want to invest in a bond, soon as you can even invest in a bond now, okay, in the secondary market, right? You will go through these people, buy the bond, hold it for a certain period, get your interest, you know, and everything, everything that's tied to that bond, from the yield to the yield to maturity, what yield you're going to get at maturity, to the yield that you're selling it at to maybe someone else. All that is done by the brokers. They'll guide you with all that. So you can take a picture of this and then you can be able to reach any of them. Don't ask me a question about who is the best. They all provide the same service. So you should be able to be guided by any of them. That's Old Mutual. You have Crested Capital and you have there. Now, for text purposes, you can invest in government bonds and treasury bills through your banks. Based on the sessions I've been having, banks, most of the banks are not helping Ugandans very well because they also do not know how to manage, how to help them. So rather than going and being pushed over here and there, just go straight to these people because this is their day to day. They deal in these things on a day to day, so it will be very easy for you to invest. So take a screenshot. It's there. The site is there, so you can take a screenshot of it, and then you can be able to yeah. Some, I think I can be able to send you the presentation. So just in case people need it, you can be able to send it to them. Now, nuggets of investment wisdom. Always endeavor to seek out for professional information about securities from licenses. I'll show those to you. You can monitor the price of a security through the USC website. You can go to the Unit Trust Manager's daily reports. These reports are sent daily, okay? And you can also get what they call a stockbroker. Stockbrokers, some of them are also here. The list is here, but I'm also going to show you another list here. So the stockbrokers send you reports. Some of us need to know what is the latest in the financial markets in Uganda. We have those questions. The stockbrokers are mandated to send you daily market reports. If you have an account with them, they'll send you what they call daily market reports. Those reports will be sent to you and you'll be able to know maybe this is how the Uganda's economy is doing. Maybe if there's any new information about MTN, you'll see it. There's new information about Airtel, you'll see it. Maybe there's new information about Stanbic, you'll be able to see it through the reports that they share. Okay. So Open up a stockbroker's account today so that you can be able to get this information. I'll share that at the end. Seek out research reports. Again, like I said, for most of us making wise decisions about our money, we might not be able to decide, especially if you're making a plan for the next 5 to 10 years. Okay. You need an investment advisor. Okay. And you need to know where your incomes are going to come from. I don't know if we have done that. Okay. Have you done an evaluation of where your incomes are going to come from over the next 10, 20 years? You need to do that. Okay. Don't wait for the years to pass or wait for 10 years to pass and then now you decide. You decide that now. Okay. Then when you've decided where your incomes are going to come from, maybe it's from a job or maybe it's from a business. Okay. Then now you can start to make projections. This is how much money I'm going to be putting aside uninterrupted. For you to have a certain amount of money next year, you plan now. You don't wait for next year. You get that is how this money comes in. Okay, you plan now. So you have to decide that now after, because you see, if you go to an investment advisor and you haven't answered those questions, then they can't like going to a counselor. They're going to ask you information that they can't guess it. I want to give them that information. You get so same thing as an investment advisor. Go knowing your incomes, go knowing the kind of where your money is going to come from, maybe things that you have to pay off. Okay, could be maybe loans or credit, whatever the case may be. Things, the liabilities, what takes your money away. You need to know those. Your assets, what brings in money, you need to know those. Then you can go to an investment advisor. They can make an investment plan just for you. Okay. Many Ugandans do not know this. For them, you see, so it's important to have this information. And that's why we have investment advisors. They are there for that particular reason. Okay. Then, for your savings, you have to invest in a diverse form. I know I'm from Capital Markets Authority, but I'm not going to stand there and tell you that land is bad. No. When you're investing, you spread your money in different places. Put some of your money in land, put some of your money in unit trusts, put some of your money, because the money will work faster in certain places. Okay. Money works faster in certain places and it is safe in certain places. But I'm not saying where it works faster, it's not safe. It also should be safe. But even for you to decide to invest in land, how are you deciding? Many people, Ugandans have lost money in land scams. That brings me now to my next point. Okay. When you're investing in a place, you don't invest by yourself, you invest through a professional, not even through a friend. Don't make that mistake, guys. Do not make that mistake. You don't invest because um, a friend of yours is investing. I promise you, there's a friend of mine who told me about a crypto investment. He had put $2,000 in a crypto investment, and he had told me, and this is a good friend of mine. He was like, hey, man, I put 2K here. I want to see how this goes. And I was like, okay, where have you said put there? He said his brother in the US had put money in that investment, and the brother even got a ticket to come here to Uganda and enjoy life here and then go back all on that investment. I was like, wow, that's incredible. That's already something. I'm like, okay. Now I had more questions. So the 2K, then I still must the minimum is said to invest $800. Okay, okay. I was like, okay, fine, give me some information, get my website, get me something. There was no website. You invest through Telegram. I don't know if you guys know Telegram. Telegram is such a hotbed of many scams. Be very careful with Telegram. And these things of sending money, you're sending money to someone, people can switch off their phones. Okay. But even having a website is not enough. Me, I was just looking at the very simple basics. Website, there was no website. So the scam was even worse than other scams. So these scams have different whatever. Eh? There are some scams that are so good. It's a scam, but it's extremely good. It operates so easily, you can't find anything wrong with it. Okay. Then you find some scams that are so terrible. The website, they just opened the website yesterday. The website looks like a Microsoft Word document. They have not even finished setting it up, but it's there, it's getting people who are investing. Okay. So ask James, I'm like, okay, James, send me a document. I was like, okay, fine. I was like, James, I really want to put money in this thing. I really want to put money in this thing. What's the minimum? Minimum $800 now. It's not a lot of money, by the way. It doesn't okay, it's a bit of money. Okay, anyway, depends, right? But for me, I don't say small money, big money. Any money is important money, okay? Because if that money suddenly is not there, that money could have been put to good use in something. It's only when the money is not there that you realize You said that they one, no, why would I put it here or there? You start thinking after it's not there, like, I've used that money, what? Put that money, I would have put it here like this. They have gotten me something. I would have used it maybe to get something. You get it? You get it. There are so many money can be used to get very important things, but when it's not there, that's when you start thinking, like, okay, James, I want to put $100 in this thing. I first see. Then I can what? That's what I was just telling him. That I was like, minimum is $800. Like, okay. So there's a group where I had put us, but we were not investing, but we were just monitoring the thing. Crypto. So they would be giving them interest every day. $20 they put, $30 they put. So his money was increasing. So I was like, but James, now I'm staying your 2K. Now it has gone, it's now 3,000 and something. These are just whatever the phone you get, eh? You get figures on the phone, but it's not in your pocket. Don't count money that you don't see. Stop praying for money which is not there. It's not in your pocket, it's just on a phone. That's how these crypto scams are. Okay, so you need to be very, very careful. So it's like, okay, James, you need to get your profit out. He's like, I was like, so when can you access your profits? That was my other question. Because for me, my plan was like, okay, if I'm just this thing, first of all, of course, now I can't invest because even the minimum $800, I can't invest. That's already, and again, also there's website, there's a lot of red flags around that. Eh? So I'm like, okay, when are you going to get your money out? It's like you can access your money only after 4 weeks. So I kept following a thing. Now his 4 weeks, whatever. I was like, okay, where can you get your money out like after now the 4 weeks have reached and now 4 weeks was like his profit on the phone was showing 4,000 something dollars from $2,000 that he had sent. He sent the money on crypto, I think through Binance, one of these places, sent the crypto money there. Then they put it on his whatever. So he was like, I'm going to try and withdraw today. So I was like, okay, soon as you withdraw, you let me know. I was like, okay, I'll let you know for sure. See, I tell you, that was in the morning. Afternoon, I was like, oh, by now, for sure, this guy should have withdrawn the money. I was expecting a call. Hey, I've gotten the money. He kept quiet. Then I think on Monday, I didn't follow up by this. Then on Monday, I think it was a weekend. Then Monday, he tells me, you know what? These people, they were in a WhatsApp group. They are now for us, we had put us some in a WhatsApp group just to give us some info. There's another WhatsApp group for them, the investors. They sent a very long message saying, now you see, there's something, what's an excuse? It's like, now he goes, the 4,000 is still there I think on their platform somewhere. So he tries to withdraw, then it brings fees. 4,000, we are deducting this money for this for this for this. It left on a $200, and a $200 is even in the capital. Remember, his capital was 2,000, so which means he had a net capital loss of $1,800. So I told him, okay, get your 200 at least to Binance. Okay, get your 200 out, the $200. So I was like, okay, I'll let you know if I'm able to get it. I checked later as he tells me, I asked him, did you get your $200? Which after they remove the fees, the one that remains. He's like, no. I was not able to withdraw the what? The $200. Then remember the brother in the US, that one to lure them in, he was able to get his, because I think his initial, he had now made money from past his initial. So even with the scams, you can get some profit after some time. Then that tactic, they use it as a way of luring you in. After now you've gotten a profit, then what happens later? You find so the brother in the US was like, okay, check on your brother, whether for him they have also done the same thing. Same thing with the brother. That's the money was there, gone. Okay, so even the corporates releasing these corporates that like the pro, this whatever, they're also falling victim to scam for very flimsy excuses. So be very, very frugal with your money. Don't put money in all of these scams. Save and secure your money in good places, guys. Put money in unit trust. Put money in government bonds. Put money in T-bills where your money will be safe. Okay. Put money in businesses that are actually working, not in scams. Okay. So that you don't complain of, Ugandans have put money in very terrible places. There's a lady who put her retirement money, about 350 million. Okay, I can't disclose the name and any information, in Capital Chicken. Her retirement money, all of it gone, 350 million, because she thought she was. I'm not an investment advisor, but if I were one, retirement money is your lifeline. How would you begin putting your lifeline in an unsure business or venture? If I was someone who has just gotten my NSSF money or I've just gotten my retirement income should be in a place where I'm only getting interest. The money is intact because you might need that money. You saw, I don't know if you guys remember during COVID, the bills that were running on social media during COVID. There are hospital bills that can even go beyond the savings which all of us have here and even going to negative. So you need to prepare for such things, eventualities. That's why this is unconventional. But I urge you guys, exercise. Some of us don't even exercise. The last thing we think about is our well-being as individuals. How healthy are you? Or you're just going through life like that. Because one of the biggest things, expenses that we never think about, we have all things that we may be thinking about. People are always crying about they don't have money for this, that, this, that, this, that. The moment you get sick, one of the biggest expenses you have is when you're sick. When you're sick, medical expenses, not other expenses here. These ones we should be talking about here. It will just absolutely finish you. It can make you go from having a good amount of money to being absolutely broke and sick. So you need to watch your health and wellness. It's very, very important. But you will not see people talking about this, but it's very, very important. It's very crucial. So that in old age, you're not sick and broke. Okay, it's terrible. It's really terrible. So the warning signs: lack of documentation and information about the investment. You have unregistered and unlicensed investment firms. You need to invest with firms that are licensed. Okay, these logos are always in your face. You're always seeing these logos on a daily, but you can, instead of investing with some of these companies that you'll be seeing on billboards, on what, you find them going and putting their money in funny places, in briefcase companies. Okay. So put your money in safe places, put your money in entities where you'll be able to invest. So you need to be careful with unsolicited offers. Okay. Complex or confusing strategies, inconsistent information, peer pressure. Okay, that's why I said simply because it's a close associate, an acquaintance, a friend, someone you know well, they can still make wrong decisions, and they are not the cause of the problem. It's not them. Okay, it's the other scam. So it doesn't mean that when your friend lures you in, okay, into an investment, now they are bad friend. No, they also made the wrong decision. They didn't think well about it, and now you also pulled into that rope. But then also you can't blame them because you should have also made your own due diligence. Okay, you should have said, I'll pass on this, but go ahead and invest. Okay, so that you manage that relationship with that friend of yours. Okay, yes, peer pressure. So don't succumb to peer pressure. Refuse to provide references. This again is at the bottom of the warning signs of investment fraud, simply because yes, they may provide you references, but it may still be a scam. So, like from this case I showed you, James's brother was doing quite well in the scam, but then it was only because he entered early, so he was able to get his money out early. You get okay? Yes, again he lost his some of the profits, but he got his initial out. So that is what caused James to also invest because his brother had also invested. So if your brother has invested in something that you know is a scam 100%, you warn them and tell them, I don't seem too sure about this investment. I think you need to invest in a proper company or in something that is more legit. Okay, so that's essentially how you go about it. So I hope you're able to get some information from that case. So as we wind up, I'm saying it's 8:33. Broker dealers. Okay, we look at the broker dealers. We call them broker or dealers. So dealers are companies that invest their own capital in these products. Okay, those are dealers. Brokers, you have dealers, you have brokers, and you have broker dealers. Brokers um, invest on your behalf. Okay, so same thing like how you have like a land broker. These what the ones that you use when you're looking for like apartments or places, stay all these places. We normally use the brokers. Okay, and then you have the dealers, those ones invest on their own. So when you want to buy shares, you can buy with any of these companies. Take a close look at them. You can go to Crested Capital, SBG Securities, Blair & Blair, Old Mutual. This one, I'm sure most of you know it very well. Cheaper. Cheaper you can invest even in stocks in the US. You can go through Cheaper Technologies. It's properly licensed by the CMA. You can go through them. Okay. And then you have investment advisors. Okay. For most of us, we don't have investment advisors. Who is the investment advisor? Okay. When you happen to come across a big amount of money from maybe a very big investment, like maybe you sold a plot of land, you've hit 250 million. Okay. You see these stories in the social media. Someone has hit a jackpot in the US, $500 million. 10 years later, the 500 million is nowhere simply because they made wrong decisions about the money. What should they have done? They should have gotten that money and put it in the hands of an investment trust fund or an investment firm like PKF Consulting, like Old Mutual. Old Mutual would have grown the money over that period of 10 years because they have investment advisors or Standard Chartered Bank. Okay. All these people are investment advisors. Okay. Your bank, if your banking is Standard, you need to go to them and they give you advice for your money. Okay. These are the contacts you can look for. So you can go and ask for these people and they can be able to advise you. Have Blue Solitaire, Sale Group, Old Mutual, PKF, Profin, all those are investment advisors. The list goes on. You have a Sigma Capital, okay, Regency Wealth Management, Level Africa, JSR Consulting. There are so many investment advisors that Ugandans can use to get advice where they should invest money. You don't decide on your own, you go through these people. So the list goes on. Amio Capital, Ndovu, Wealth Uganda Limited, Price Waterhouse Coopers, Level Africa, JSR Consulting. Fund managers, those are for companies. Okay, we cross over to unit trust managers. Sanlam provides unit trusts. ICA provides unit trusts. Old Mutual provides unit trusts. Zeno provides unit trusts. Britam, SBG Securities, and Cornerstone. Okay, so that's it from me. I think now it's time for questions. The time is 8:36, so I believe we are still within our time. And I hand at this point back to Samuel. Thank you so much.
All right, thank you so much, Mr. Balije. Friends, join me in thanking our speaker for the great presentation and ideas shared. A lot of information shared, and I could see people following through. Thank you so much for those virtual claps and for the comments that are also coming through. Would love to, would love to hear what's your greatest takeaway. At this point in time, would like to also take some questions. So we usually give an opportunity. If you want to raise up your hand and ask your question directly, you have the opportunity. You can raise up your hand and the question will be taken. But we also have quite a number of questions in the chat box. Thank you so much. The thanks that are also coming through to you, Norbert. Thank you for the presentation. Let me just try to run through some of the questions. So one of the questions is around slides. You said you share slides that we'll be able to share within the WhatsApp group for TPC. He has even shared a copy here, but just in case you're part of the WhatsApp group, we'll be able to share. In case this is your first time and you've not been part of the Transformation Professionals Club community, I shared the WhatsApp link, which you can click on. It's a form that you can fill, and then you'll be able to get a link at the end of the form into the group. So that is what I can say. I want to, as we get down, I want to just draw you back, Mr. Norbert. If somebody is starting out in their journey of investment and they are looking at treasury bonds or treasury bills, and then unit trusts. If somebody is starting out with a small amount of money, it's not small, but 1 million shillings, would you advise them to go and go to unit trusts or go to treasury bills and bonds? And this is irrespective of liquidity and as a requirement, but looking at it from the point of return on investment.
Thank you so much, Sam. If it's for return on investment, I believe if it's a capital like 1 million, government bonds tend to do better with return. But it would also be, again, to answer your question, it's really government bonds that do better because government bonds, their interest is higher than the interest that you find in the unit trust. But then you have now other things that come in that will now make that affect the decision of where to invest. You have return, that's one, that's for government bonds, but it could also be in terms of how soon does a person want to access the 1 million, okay? But again, to get the full return from your investment, you need to at least have it for some time. Because if you put money in a unit trust and it's giving 12% per year, if you get your money out at 1 month, you're getting only just a tiny portion of that money, less than 1%. So if it's holding for the full term, I would say government bonds tend to do better. But then you're looking at something like shares. Now, shares, the way the shares work, if you're to track the performance of 1 million, say from January in MTN and Stanbic and Quality Cases, 1 million in January, I promise you, at this point, would have given a person 400,000 shillings on that 1 million. 40% would be there. Okay. So again, but then you beg the question now in terms of like 40% may not have happened by this period. Okay. Because shares go up and down, up and down. So maybe it would have been 40%, probably maybe like in May, then it drops down to 20%, then now 30%, now back to 10%. So shares are volatile. They move up and down, up and down. But over a longer period, they tend to do better. So again, to come back to sum up on the question, government bonds would be most ideal. If you're not looking at other factors, if you're focusing only on return, then the government bonds are the deal.
Okay, great. So there's a question here. I think it's from Annette, who says that thank you for the session. She's interested in a recap on balanced funds. I think there was a slide where you had you were speaking about the different types of unit trusts funds. And I think that's where you mentioned the balanced fund. So she was asking for a recap. We have a recording for this session. So Annette, you can be able to catch the recording on the YouTube channel. You can go to YouTube and search for Coach Samuel Ibanda or search for the Transformation Professionals Club. You'll be able to see the recording of what he went through. But in addition to that, she asks if she's interested in reinvesting her dividends, how does she do it? So you can try to just cover some aspects on the balanced fund and then on the reinvesting her dividends.
Yeah, so the balanced fund is essentially tends to perform a bit higher than the other funds. However, this is simply because of a portion of it is invested in shares. Okay, so balanced fund, if you want to invest a balanced fund, you need to again do a personal evaluation of yourself. Are you investing for the relatively medium term to long term? If yes, then a balanced fund works for you. If investing for shorter term, then you need something like a money market fund or the umbrella trust fund, because the balanced fund, its interest is very volatile. It will move up and down so quickly. Sometimes it's negative on certain months. Yes, I'll tell you it is. So that could cause you to maybe get a few worries about investment. Not that the investment is bad, but a balanced fund is for people that have a relatively longer term, but also people that tend to look at risk as not a bad thing. So they will look at risk as maybe they want moderate risk or maybe close to high risk. So the balanced fund works for them. So, but don't only think about the balanced fund. There are many other funds. So when you speak to these unit trust managers, they'll be able to guide you on which fund is most ideal for you. Okay. We also have some investment advisors like Zeno. Zeno has something unique whereby when you go to them, they have a robo advisor that will assess your risk, your return, the amount of money that you want to invest, the investment period that you want to maybe invest for, and then it will be able to determine and say this is the best asset for you to invest in. Now, to come to the second question on dividends, again, dividends, if you remember what I said about them, the income that comes through dividends is very small. So if you're going to get, if your strategy is to invest in shares so that you get money from dividends, you need to have a relatively big amount of capital. Okay. Can you reinvest your dividends? Yes, you can. Now, when you open up a SCB account, the account where your shares go, when you buy shares, those shares are transferred to a depository where everyone's shares are. Okay. So when you hold those shares, every single time you're in those shares, you're going to, if you're holding shares for a company that has paid dividends, your dividends will come to you. You'll see them on your statement for that account, the one where the designated account with that stockbroker. So when you open up an SCB account, you'll also have their account details for that stockbroker. So when you buy shares, whether when you want to buy shares, you're going to send money to that stockbroker's account. The stockbroker will buy shares with your money, and then they will tell you that this is your SCB statement. They have bought this amount of shares for you with your capital of this much. You hold this amount of shares. Now, when your dividends are paid, the dividends are paid to that same account, and you'll be able to see those dividends on your statement. Normally, companies or these companies that have the listed companies, they normally pay dividends 3 months or 4 months after their AGM. Okay, so that money will come to you, and the AGM happens every year. So if you want to reinvest, it's simple. You just tell your stockbroker, instruct your stockbroker to you send that money back to them. The money, because the money comes to your account, so you're going to send to their account, and then now they will use that money to buy for shares. So it works just like that. It's a very simple process. Yeah.
All right. There are quite a number of questions here that are coming through, but maybe just one random one. I know, Norbert, you're very good at tracking forex. This is something that I've seen you do quite well. There's been a lot of hype around forex trading. And I just want you to, I know you've commented on crypto and quite a lot, but I just want you to comment on Forex. I know we have quite a lot of young people here who this is their interest area. Would you just comment about investing in Forex and what are some of those things that somebody needs to be aware?
Yeah, now I worked for a company dealing in Forex before, that is FX Pesa. Now, Forex is not bad, but I can tell you that the number of people losing money in Forex is massive. The statistics show about 70% of retail traders, individual traders, lose money in trading. Okay. Personally, again, this is again aside from capital markets. Personally, for me, I trade, but I trade under a prop firm. I trade under a prop firm. So anyone who is thinking about getting capital to, if you want to do serious trading, you have to do it with a proprietary firm. Okay? Because a proprietary firm tests you. Now, for me, I had to go through what they call challenges. You go through challenges, and they measure how well you perform. But even a strategy which they use before they give you their capital, the strategy which they use for most people who are succeeding in Forex, they are doing swing trading. And that is the same strategy which is used by companies. This thing of day trading is extremely volatile. Day trading, for the kind of product that Forex is highly volatile, highly volatile. The markets move so many times and so quickly and for so many reasons, for some people don't even know. That's why retail traders lose money. Over time, these assets tend to do well. Over time, you find, for instance, like over time, the dollar maybe has increased by this much over 6 months, over 1 month, over 2 months, over 3 months. So you have to have, if you're doing Forex, it has to be medium term to long term. Okay. That is typical how the strategy is. But I will not advise to trade forex with your own capital. It's just count that as school fees paid. For you to do it, you want to do it properly, and for those I know, which who are very few by the way, because the only person I know who is trading through a prop farm is not even a Ugandan. He's in Dubai. He's a European. You see that? Eh? So for many Ugandans, most of them, the reason why many people don't talk about prop farms because many of them can't pass. They can't pass the prop farms because of the rules that they give. Because the prop farm will tell you if you lose, normally it's about 3, 4, 5% of the capital, they take the account from you. And for many forex traders, they can't manage that. So what did they do? They get some of their money, they're putting it in forex. Very dangerous. Again, for many people, they are risking very small portions of money to make money quickly. You find people saying that now for me, I'm going to put my $100, I want to take it to 100K. It's not going to happen. Your money is going to go, please. Get that $100 and use it maybe to go shopping. Okay. Yeah. So again, many people are not serious about their finances. I will just put it plainly to you. Again, if you want to be serious about trading, why are you trading with $100? Who does that? Why are you looking to trade with 1K? Look to trade big money. Look to trade 100K, 50K, money which you can use to make money. You get, yeah. So if you want to get into that business, it has to be through a prop firm. You do it through a company. They test you. After testing you, if you see that now you've gotten to the other side when you've gone through those rules, which are extremely, it's a boot camp. You can search about preparatory firms. Many of them are in the big countries in Europe, especially Europe. That's why you find many of them. The one that I used was in Dubai, and I passed it, I think, about 3 times. I failed. Well, after passing them, I got some withdrawals, about $8,000 from one of them. Then, of course, because the losses accumulated. So when you reach that, then after now, you have to start afresh. You see, so that's through prop firms. But for many people, like I told you, they can't manage prop firms because of the risk. Forex teaches you who you are as a person. For many people, they are trying to chase big wins, and that's not how the forex thing works. You have to have medium term to long term outlook. You see that? Eh? Yeah. The other thing also is for many of these brokers are not regulated. Forex is not regulated in Uganda. So if you invest with a broker who is that's if you're trading on your own and not through a prop firm. If you invest in a forex broker in Uganda and the broker is not regulated in their jurisdiction, then you're likely to fall prey to a scam. So you need to be extremely careful. Yeah. So it depends on you again. Are you a serious person? If you're serious, go through a preparatory firm. So that's the only way to do it. But getting money and putting
Okay.
for many people, no, they're not doing it the right way. Yeah.
Okay. Great. 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 I just want thank you so much for that response. There's somebody who asked, as a foreigner, this is from Alex Saka, I think it's in Kenya. Can a foreigner invest in treasury bills and bonds in Uganda? If yes, what's the procedure?
Yes, of course. Yes, I believe you can. Even on the secondary market, you can. You just need to go through a stockbroker. I believe the details normally will be like a passport. Then you'll have, of course, a designated bank account for where your proceeds are going to go. For that, you just have to go to the brokers I've shown you, these ones here. You can just go through to them and then you'll be able to invest. Just take down those details. Okay. We have Old Mutual, Crested Capital, Dan Blair. Yeah.
Okay. There's a question from Timothy that says that he currently joined a group of 10 members at Development Club, which he shares. They are looking forward to bigger collective investment, specifically in treasury bonds. However, most of the friends are new to this form of investment. How best can we invest as a group and not as an individual for that case?
Yeah. How can you invest as a group? I think the first thing you need to do if you're looking into how can you invest, I can tell you there's a group I met, I think they are young guys and they are Ugandans, very young guys. They are doing, I think, IT work. There's a lot of money in that IT sector. And they are a group of about 3 people. But these guys, they told me that AUM, which they have as three, I was shocked. It's, I think, 250 million. wow, I was like, incredible. So why I was in our whatever with them is that they were just trying to it was just like a discussion about money and what I think they knew most of these things. But the first thing I think they did, because by the time I met them, they already in unit trust. So first thing is before you even think about putting money in unit trust, first talk to an investment advisor. What are the goals of your club? You need to have maybe some kind of like a document, possibly that lays out how you want that to work, like how you want it to function, all that, what you want, the rules for the club, all that information I think has to be laid out in a document. Okay. When it comes now to an investment plan, or like in some whatever they call it a trust deed, how the money should be invested, that needs to be drafted possibly by a lawyer. Okay, because you are a 10-member group, there's definitely going to be some issues here. And that's one saying, hey, why did you put my money here? What? So you have to get a lawyer to draft out for you a trust deed for that group. Then within that trust, there has to be a way in which how that money is going to be invested. So we call that an investment policy statement. Okay, the investment policy statement should lay out how your money is going to be invested, but that has to be done by a CFA or even some here, the CPA. They can do that. They can organize that for you, structure it out properly, and you need a lawyer again for that. And they need to be limits on how you're going to whatever. Trust me, these things are coming together, but there will always be some concerns by one or two people, three people. They're saying now this. So everything has to be ironed out very neatly and very clearly. And then it has to be gone through by all of you people. You need to decide, you vote, and then you can come together and say, this is how we are going to invest. So it's a simple question, but a very, again, the question requires a lot. So you need an investment advisor to guide you with that. You need, you also need, what is it? uh, sorry, you need an investment advisor, you need a lawyer, okay, to guide you with some of those things. Yeah. I hope that answers the question, Sam.
All right. I was when you mentioned about the investment policy, I just wanted to
Yeah.
share something, a sample that
Oh, yes.
I've tried to do before. And I think you mentioned in terms of
Thank you very much. This is
allocations.
it.
Yeah,
Important.
being able
Yeah.
to being able to know what size of your portfolio is going in which different investment scheme. So
Yeah.
I think it's quite important. So I just wanted to share that immediately. There's a
Yeah.
question that I think came through from one of the participants. This is Winnie, who says, informative session. If someone has invested in, for example, MTN shares and they pass away, what happens to those investments? Can their family inherit or transfer them in their own names?
Yeah. So when you're opening up when you're doing the KYC, that you know your client is a stockbroker, first thing is when you fill that information, is that bio data which you fill in that form, your name, your address, the location, all that information. When you fill it out, you have what they call a next of kin. The next of kin is a very key detail within that form because there's a person who is going to be contacted for any information about you. Okay. Now there will also be the person who will decide when perhaps you pass away and you still have a decent amount of money with your shares. They are the ones to decide where that money goes to. Okay. So yes, you need to be very careful who you put when you're filling these things, because you need to put someone who you're certain possibly will decide or will make the best decisions at that point of time when you're no longer there. So you also need to tell them that you've also filled out that form and they are there. You get. So you don't put someone as an next of kin and you do not tell them. You need to tell them so that in case the stockbroker reaches out to them, they will remember that maybe Winnie had already told me and I was aware that she had this amount of shares and I'm going to distribute the shares for her children. You get. So something like that. So you have to think well. Normally it should be like a spouse because they are the immediate person. Okay. Yeah. I don't know. A spouse or whoever you decide as your next of kin. Yeah.
Okay, all right. There's a question here as well. I think does Uganda offer treasury bonds and bills in dollars?
No, it doesn't. It doesn't. But if you're someone who earns in dollars, we have some unit trust funds that are available in USD. Okay. So if you want to maybe lock in your investment or keep because of the forex risk, you don't want to change your dollars to Uganda shillings. You want to maintain them as dollars so that you avoid that risk of having to switch back to dollars after investing, depending on how the forex market is. You can invest in a unit trust that is available in your currency, in your capital currency, which is USD, right? So that's how you can go about that. Yeah.
All right, great. I don't know if somebody wants to speak.
Let me
Else
just
here.
add on that, Sam. Yeah? If you want a strategy for investing in T-bills and bonds in USD, well, okay, of course, again, no, you can't invest in USD. But if you have capital in USD and you want to invest it in Ghana shillings, you need an investment advisor to do that for you, to organize a structured plan in terms of how, based on like the interest rate risk, they factor all that in because the interest rates affect the bond market. So they have to factor all that in, and then now they can decide and then you invest. But you need an investment advisor for that to guide you with that. It's not something you just go ahead and do. Yeah.
All right. So thank you so much. Christine, your microphone, I think, was on. I don't know, you wanted to comment something? Okay, maybe it was an error. There's a last question as we conclude, and again, I want to appreciate everyone who is still here listening through and the questions that are coming through. There was a question about my question: are government bonds advertised in a specific period or they run out throughout the year?
So usually you find some auctions they're repeating the same terms of the bond, but they'll like it will be like the same terms of that bond has been auctioned before. They'll just bring it back on the calendar for the same amount. So it happens all through, like every 2 weeks there's an auction and you can be able to. What you need to know is you just essentially need to have the details of the details I showed some earlier in the presentation. You need the details of UAP Old Mutual. You need the details of Crested Capital. Then you need the details of Dan Blair. Whenever there's any auction, they'll reach out to you, and then you can what you can do, you can organize yourself in a way that have your capital ready with the broker. So instruct them. When an auction comes, is how you can structure out your things in such a way. Even these people who do bond layering, is how they structure it out. Sit down with an investment advisor, sit down with a stockbroker, structure out a plan for investing in these things. When you're investing in these assets, you don't just wake up and invest, and you don't invest without a plan. Have a plan how you're going to invest in these things. If you want to invest in bonds, the bonds that are going to be auctioned over the next maybe 5-10 years, you need an investment advisor. Sit down with them, structure out. They will be able to see maybe this is how you should be able to invest the money over this period. If the auctions that are happening every 2 weeks, this is how they're going to run. This is how your capital is going to increase, the interest, all that. You need an investment advisor who can structure that out for you, and then now you can be able to invest without any worry. Yeah.
Okay. One last one. I think you've mentioned something around it. How is compounding of returns from bonds done? Is it automatic like unit trust, or it means I'll use the returns to buy another bond? And does it mean that I may need to go to the secondary market, which is instead lower than the primary market?
The compounding of returns on bonds, when I say compounding, we are saying that the interest which comes maybe from your coupon interest, you're getting it and you're reinvesting it so that money now is able to get some income. So that's essentially how compounding works. It's as simple as that. You're just getting your coupon interest and you're putting this money in. Now, there's simulation that I made for a client, and how the simulation works. You need an Excel sheet first of all. Have an Excel sheet. If you can't make one, you can get an investment advisor to make it. A basic one essentially just has the bond term. It has your initial capital. It has the interest. Okay, to show maybe this is how much you're going to get. It has the tax, and then now you can be able now to bear it out. This interest now came maybe after these 6 months. You're now adding it to what is initially supposed to get at maturity. Then you see, so the money keeps so the capital on which your interest is calculated changes. That's how the compound works. Okay. You're getting interest at maybe 10 million. Now you're getting interest at higher than that. Now you're getting interest at, so the capital on which your interest calculated changes. That's how it works. Okay, that's how the compounding works. Now, if you have a bond, if you bought a bond during an auction and you do not want to hold it together year to maturity, you can go to the secondary market. But when you're going to the secondary market, you're either going to make a profit or a loss, depending on what your bond is going for in the secondary market. Okay. So if the secondary market, your bond is trading at a premium, you're going to get a higher yield to maturity than you're initially going to get. If it's selling at a discount, then you will get a lower interest rate. So that is how secondary market works. For you to for you to sell your bond, you should go to an auction in the secondary market. Again, like I mentioned some earlier, you can go to any of those stockbrokers. You can go to the Crested Capital. You can go to Old Mutual, UFP, rather Old Mutual, or you can go to them there. And they'll be able to help you with that process. Yeah.
Okay, great. We concluding, and we just want to appreciate this a hand from Mustafa. I think Mustafa will be the last one. And then you'll respond that the same question around REITs. So Mustafa, you can ask your question, and then you can answer the category.
Okay, thank you, Coach Samuel. Thank you, Norbert, for the wonderful presentation. I came in a bit late, but just have two questions. We normally see stock market movements on a daily, whereby the share price rises and reduces on a daily. I'd like your input on the factors that determine that movement on a daily basis. Maybe also there's something that you mentioned about MTN share price going up, rising immediately after COVID. We expect that after COVID, since there was that adverse effect on the economy, the share price would go down. Then what makes it go up? And to a speculative investor, would that affect the decision to invest? Thank you, sir.
Yeah, so for shares, the discussion in shares is so much. Let me just see what to tell. So there's what we call corporate actions. Corporate actions are essentially any material information for a stock price, anything that is material for that company that feeds into the stock price. It could be maybe change in management, change of directorship. It could be maybe announcing a new unit of business. Sam, can you still hear me?
Yes, I can hear you. We can hear you. We can hear you.
All right. I think one of my AirPods has run out of battery. Yeah. So, like I was saying, corporate actions, we look at information that is material for that company. For corporate actions, we look at things like their financials. When they announce maybe they have posted this much profit, okay, for maybe this year, and the profit was driven by this and this and this. Every single time a company announces profit, okay, that profit essentially will affect how the stock price moves. Normally, things that will benefit the value of a stock upwards will be things like very strong performance, financial performance. If maybe it has gotten new management and that management is experienced, and maybe it's a good news and big news. It could be maybe the company is going to expand into something. All that drives the value. But you also have now the sentimental factors, okay? If people are feeling good about the company, then they will invest and you will find that the value of the company is rising high, okay? The stock market prices, the current price you see of the stock market, okay, is factoring in every available information, okay? The other thing also about the stock market is the stock prices you see. The way the stock market moves, it's forward-looking, okay? That's why when you look at COVID, if you look at when COVID hit like this, that is when the stock market started rising, okay? When COVID actually hit and we saw the worst out of COVID, when there is peak fear, that's when you buy. That's why you find like some of the greatest stock market investors like Warren Buffett, they buy when there is peak fear. When for us we're running all over the place like headless chicken, that is when Warren Buffett is buying. Because there's this saying that it can't get any worse than it already is. Peak fear. When the fear has reached the highest peak, that is now when you buy. Okay? And that is essentially how these markets work, which is why during COVID, we've had over the past 100 years, when I was doing my master's, there's a paper I studied called Practical History of Financial Markets. You look into the history of the stock markets around the world. There have been worse things than COVID. There was the Spanish flu in the 1910s, 1915s, there was Spanish flu. Spanish flu, so many people died, millions of people in Europe. But what happened? Europe came out of that. We had the World War was World War One, I think around 1910. Then we had World War II, I think around 1929 to 1945. All those periods there was war. Then what else did we have? We had this credit crunch 2008. You know, when the U.S. Real estate market collapsed. Okay, what happened during that period? Definitely, all the stock markets were affected, but they originally come out of those periods. You saw tariffs this year. Tariffs were announced by Trump. Okay, what happened? Every stock market, even in Uganda, the stock markets were affected because he taxed everyone. Okay, and then later he said, okay, now we have put a temporary pause on the tariffs. Okay, what happened? The stock markets recovered quickly. When you look at where the stock markets are now, they are all what? Up. But you don't buy when now the news is good. You buy when the fear is at the highest. That's when you what? You buy. Okay, so there are many factors that affect the stock market. But just to keep it simple, financial information, change in management, good news about the company, all these different factors can feed into the price of a stock. Yeah.
All right, great. Thank you so much. There are quite a lot of questions still coming through, but I know that we're out of time and we want to make sure that we release you. I just want to take this opportunity to thank you so much for the session. And I know that you had earlier shared the slides. Those slides have, when you look at them at the end of the slides, there is a contact there and an email. So it's quite important that you're able to reach out to Norbert. You can just take a screenshot of the SEM, or you can be able to get the slides. We'll share the slides in the WhatsApp group. And like I indicated earlier on, I have also shared a link to the WhatsApp group. You can just click on it, and we'll be able to be able to interact. Again, if this is your first time joining this session, this is the Transformation Professionals Club. Our key goal is to help professionals connect, learn, grow, and earn. And we do that through some of these sessions every week, every Friday from 7 to 9. We organize and we invite resourceful people like Norbert to come and share with us this kind of information. And today we are glad that we've learned. So thank you so much, Norbert. I'll just ask you to give your closing remarks as we conclude.
Thank you so much, Samuel. Again, Samuel, can you hear me?
Yes, I can hear you.
Yes. Thank you so much. Again, guys, what I can say is an informed investor is a protected investor. Make sure that information is your edge. Make sure that you have an information edge. Get information. Never stop learning. Never stop seeking out new knowledge. Thank you, Coach Sam, for making such a platform available for this impactful information. Personally, I'm going to make sure I always attend so that I'm able to get this information on a regular basis. Make sure you keep informed. Another thing also, I've shared the information there. You can go to the CMA website, www.cmauganda.co.ug. If you didn't know any information from the authority, you can send an email to education@cmauganda.co.ug. Whatever you may need, I'll be able to provide information through that email to any of you. I wish you guys all well. Another thing is also, as I go off, I need you to pause and reflect on a financial plan. Do you have a financial plan for the next 5-10 years? Do you have an Excel sheet where you manage your money every month? Start with the basics, okay? Save every month, very important. Every month, make sure you save. Money that you're saving today is going to save you tomorrow. That's what I tell people. So save. When you make so much money, there are going to be times when you have much more money than from a business, or maybe you've hit a deal, you've got money. Save that money, okay? Because you'll find a point where maybe you have not had bills for 6 to 10 months, but you've saved some money. Put money aside so that money can grow. Thank you so much. I wish you all an awesome weekend and all the best. Cheers. Thank you so much.
All right. Thank you so much, Norbert, for the great insights, and thank you so much, members, for coming through. I just want to just share that our programs are on at the Transformation Professionals Club. Make sure that you're part of our WhatsApp community. We also have an upcoming mentorship program that is in the area of public speaking. Now, we've learned quite a lot around investing in different avenues. But of course, one of the other investment area is yourself, making sure that you are investing in your skills development, investing in your knowledge. So the Transformation Professionals Club has organized the public speaking and communication skills mentorship program. And this is on the background that public speaking and communication skills are key skills, especially for somebody who wants to grow within their career, but also grow within their business. So we'll be starting this program on the 5th of November to be a 5-week program that will conduct online and physical. Reason why we also have physical sessions is because we want you to have a physical feel of a stage and also being able to speak before different people and also get real-time feedback as this is all happening. Those that can be able to join online, this is also an opportunity for you. You can also, will also be able to have how you can facilitate online presentations like this one, how you can also do videos for your personal brand. There's a lot around communication and public speaking that we'll be trying to tackle. So it's something that you need to look out for. The fee for this is 300,000 for members, and members, those are the principal paid up members. We also have 450 for non-members. But right now we have a running early bird discount. If you pay by 10th October, this is at 400,000. In case you have any information that you need around this mentorship program, you can reach out to us on that number, but also maybe send an email on that. Otherwise, I want to say thank you so much for joining through and being part of this community. We meet every Friday from 7 to 9, and we are here to learn one or two things. We've done quite a lot of videos or webinars on different aspects on public speaking, personal branding, personal finance, and today we've done on investment. This session has been recorded and you'll find it on our YouTube channels. That is Coach Samuel Imanda, but we'll also post a video on the Transformation Professionals Club YouTube channel. So go look for those YouTube channels and subscribe on them and be able to follow some of our previous sessions. These materials are really helpful because one of the things that we do as a Transformation Professionals Club is we try to bring people that are resourced, people that understand what they teach. So at the end of the day, once you listen through and get all this information, it really does well for you. So I just want to appreciate everyone who has come through. Thank you so much for coming through. And in case you're not part of our WhatsApp group, please click on that link. I'm going to share it again. Or you can also follow us on the different platforms. Let me just try to share that link such that you can be able to connect. So I've shared the link again. So in case you're not part of the WhatsApp group, just fill that form, and that form at the end of it will be a link that will put you into the WhatsApp group. And when you're in the WhatsApp group, you can be able to access links to some of these sessions as and when they come up. And then you can also be able to access some of our programs that we also do offer. So I just want you to click there and see how to subscribe. I just want to also just share our YouTube channel in the chat box. So I've also shared it. When you click on it, it will take you to the channel. Make sure you subscribe such that when a video goes up, you can be able to know when we've uploaded one. I just want to appreciate you for coming through, and I wish you all the best. In case you want to know about investments, you can be able to reach out to myself. This is an area I do handle. Mr. Norbert Balije, who has been our guest, is also on LinkedIn. You can go on LinkedIn and just look for Norbert Balije Kizai. You'll be able to catch him there. And yes, he also shared with us the CMA contact addresses, which you can use to reach out. Friends, allow me end this session here, and I pray that you have a good weekend. Bye-bye.
Bye.